Good day. The purpose of this presentation is to examine and explain the appreciation of the dollar relative to other major currencies since the beginning of 2022 and to discuss the economic implications of the dollar strengthening relative to other currencies around the world. Generally speaking, economists identify four determinants of exchange rates. These determinants assume we are discussing or examining the exchange rate between two currencies that are free floating or determined by the market forces of supply and demand. So what factors or determinants affect the exchange rate between the US dollar and other major currencies? There are four of these, and we will review them in order: interest rates, inflation, domestic economic performance, and market forces / speculation. So, ceteris paribus, other things equal, if the interest rates in one country increase relative to another nation, we would assume that that currency would appreciate relative to the other country. Example, interest rates in the United States have been rising since the beginning of this year. Interest rates in Europe have not increased, or definitely not increased to the same extent. Therefore, higher interest rates in the United States would attract foreign investors, monies from people living in Europe exchanging their euros for dollars, looking to capture the higher interest rate in the United States. So higher interest rates in one country relative to other countries tend to make that country's currency appreciate or strengthen relative to the other nation. The second factor is inflation. Inflation decreases the purchasing power of one's currency. Now, obviously, the entire world's been dealing with inflation, but it's all relative. In other words, if inflation in one country is far worse than in another nation, we'd expect the nation dealing with the higher inflation, we would see that currency depreciate relative to other major currencies. This third factor is the domestic economic performance. So if the U.S. economy performs relatively better than the Eurozone, Great Britain, Japan, we'd expect the dollar to appreciate or strengthen against those currencies. Likewise, if the U.S. economy were to perform relatively worse, we would expect the U.S. dollar to depreciate relative to those currencies. The last and not least important determinant of exchange rates are simply market forces and speculation. Currencies trade on what is known as the Forex. Currencies trade around the world 24/7, 365. There are investors who take positions in currencies for pure financial speculation, and these factors definitely influence the exchange rate between the US dollar and other major currencies. We're going to examine an article from the Wall Street Journal, US dollar's strength lifts Americans' relative spending power. This article is from September 5th, 2022, Wall Street Journal, and we'll talk about the economic implications of the strengthening dollar. Let's begin our currency exchange discussion by reflecting on U.S. exchange rate table from September 5th of this year, keeping in mind that exchange rates are constantly changing, so this information is already in the past. However, relatively speaking, it's still pretty close to where the dollar trades against these other currencies. So the dollar is now at parity with the euro for the first time in 20 years. That is to say, $1 buys 1 euro. If you took $100 over to Europe and exchanged them for euros, you would receive 100 euros in return. The dollar is also has also appreciated significantly against the British pound. The dollar is at its strongest against the pound since 1985. $1 now buys 0.86 pounds. The yen has also depreciated significantly against the dollar, or the dollar has appreciated significantly against the yen. $1 now buys 140 yen. This is the weakest the yen has traded against the dollar since 1998. This is a one-year chart of the dollar-euro exchange rate. You can see a year ago, $1 purchased 0.82 euros. Now, as we just said on the previous slide, $1 purchases 1 euro. So the dollar has significantly appreciated against the euro, where the euro has depreciated against the dollar. This is the same idea, except we're looking now at the US dollar versus the British pound. You can see the trend is highly similar. The dollar has appreciated significantly against the pound over the last 10 months. Likewise, looking at the trend between the US dollar and the Japanese yen, as we discussed earlier, the dollar appreciated significantly against the yen. So against these three major currencies, the euro, the British pound, and the yen, the dollar has appreciated or strengthened quite substantially over the past year. Or another way to say this is the euro, the yen, and the British pound have weakened against the US dollar. So this is the chart of the US real effective exchange rate. This chart was actually in the article from the Wall Street Journal, and this information was provided by the US Federal Reserve, or our nation's central bank. Why is this an important chart, or what is it telling us in economic terms? The real effective exchange rate for the dollar measures the currency against a group of key US trade partners. So taking into account the changing prices of goods and services in each relevant economy, considering inflation provides a broader assessment of a currency's relative purchasing power than traditional measures. The economic implications of this US real effective exchange rate is straightforward. Inflation is high in the US, but US consumers' relative purchasing power has actually never been higher. So the dollar has soared against other major currencies. In fact, the dollar is up 13% against other major currencies in 2022. Like we stated earlier, the dollar is at parity with the euro for the first time in 20 years. It's the strongest against the pound since 1985. And the Japanese yen is now at the weakest against the dollar since 1998. So, interestingly enough, if you're an investor, and this is why economics is a powerful class, and we will talk about the forces of supply and demand which ultimately influence and impact interest rates, this information is useful if you think about where to take economic information and practical or professional gains. The US or the dollar is actually the best financial investment of the year, bar none, except natural gas. So investing in stocks this year has been rough going. Even bonds haven't been tremendous, but the US dollar is up 13%. The only financial investment beating the dollar is natural gas. Let's use supply and demand and market analysis to explain the economics behind the appreciation of the dollar relative to the euro, the yen, and the British pound. We only have to perform this exercise for one of the three currency exchange rate, and we'll examine the dollar-euro exchange rate because the economic trends which are affecting the dollar-euro exchange rate are the same trends that are affecting the dollar-pound and the dollar-yen exchange rate. So remember, market forces determine exchange rates when economies or countries allow their currencies to freely float. Therefore, supply and demand factors impact the exchange rate between the dollar and other major currencies. So if we look at this graph, it tells us that in the beginning of the year, $1 cost 0.82 euros. So this is the market for dollars priced in euros. The market for dollars priced in euros. What has happened over the course of this year which has caused the dollar to appreciate significantly against the euro? Two factors are contributing to the dollar strengthening or euro weakening. The first one is that our nation's central bank, the Federal Reserve, which controls the nation's money supply. So our nation's central bank, Jerome Powell and partners, have set us on a course of interest rate hikes. At the beginning of the year, they raised the key federal funds rate by 0.5%, and they've gone even more than that in the last two meetings, 0.75 or 75 basis points in the last two meetings. And word on the street, or people in the know, those people in finance and economics who follow these trends, predict that the Fed will actually raise again by another 75 basis points at the next meeting. The other economic factor driving the appreciation of the dollar relative to the euro and of course the yen and the pound, is that relative to the performance of the Eurozone economy, the economy of Japan and Britain, the U.S. is actually doing okay, doing better. The recent jobs report, Friday's jobs report 2022, came back with relatively strong numbers. So these two factors, all right, the relative higher interest rate in the United States compared to the Eurozone, and the relative strength of the U.S. economy compared to the EU, are increasing the demand for U.S. dollars. Investors around the world, by the Fed policies, attracting monies from economies with lower interest rates. So for instance, if you live in France, if you live in Spain, if you live in Germany, and you're looking to invest in a secure financial instrument, the interest rates on U.S. 2-year and 10-year treasuries, government bonds, has gone up pretty significantly over the past 6 months. That increases the demand for U.S. dollars. The increase in demand for U.S. dollars drives up the price of the dollar priced in euros. So now it costs €1 to buy that same dollar. Let's talk about the economic implications of the appreciation of the dollar against the euro, the yen, and the British pound. Let's finalize our presentation by making 3 important economic observations. The dollar has appreciated against the euro and appreciated against the British pound. Relatively speaking, that makes imports from these economic zones less expensive to U.S. consumers. So the strengthening of the dollar, and of course Japanese products as well, has actually increased purchasing power for U.S. consumers. So it's been a boost to U.S. consumers. So the first observation is the appreciation of the dollar has made U.S. imports relatively less expensive. The second observation, in the UK, they're experiencing double-digit inflation. In Europe, especially with the war in Ukraine, they're experiencing record high inflation. So the stronger dollar is not helping this inflationary issue in Britain and especially in Europe, as higher priced U.S. imports, because of the weakening currency, are adding to the inflationary problems within those economic zones, especially Europe. And on a deeper economic thinking level, the stronger dollar or weaker euro has actually created tighter liquidity, leading to more economic worries in Europe. The final observation, obviously there's U.S. consumers who have been hurt by higher gas prices, higher food prices, and inflation here in our domestic economy, but actually U.S. inflation is far less problematic than in these other zones. So relatively speaking, inflation has been more benign in the United States thanks to the strengthening dollar relative to the UK and the Eurozone.